We can go over some tickers if you want, but
Yeah, let's do that.
you want to go over some tickers? Let's
Yep.
let's go take it back to the old school. All right, let's do it. Let's get some pens and papers out. Let's do that.
I want to be messy so bad, but you won't let me. Go ahead.
All right, where we starting at, Ian? So we're gonna go over how many? 15? Can we get 15 in there?
If you want to.
Let's do it. Let's go for it. All right, first ticker. Ian, you're gonna give us your thoughts on it. INTC.
Intel I like at $38 if you want to swing trade it. They have a bunch of competition. But if you look at if you go to the max chart, let's go max chart real quick. That high of 74.88 was back in the day. So whenever we have a stock that has a precipitous decline like that, I'm really not favorable upon it unless it hits an all-time low to want to leg in. Also, when I'm looking at a space, can we put in chat, in terms of the chip space, what does Intel rank? So ideally, I want to go with the top two. But if they got back down to that low of maybe like, I don't know, $30 or $29, I may want to take a position in. I still don't like a long term. I know some of the innovations that they're working on, but I think AMD, NVIDIA, Taiwan Semiconductor, or ASML are much better. So for me, they're fifth at best. But when you see, so when I'm looking at a chart, the number one thing I do is as I go back since inception, and I want to see a gradual hockey stick increase in the stock price. When I have a price that falls apart like that, it's usually not a good sign. I know they had a good day today, but long term, I don't love it. But those are the prices I would buy it if I had to. I'll put it in my portfolio.
All right, so we got Intel. Let's go to the next one. We got Visa. Let's check out Visa. Interesting enough, when we were in,
so for people that's just watching Market Mondays for the first time, so what we're watching with this chart right here, can you go back to that?
I got you.
Yeah.
So this is you never want to traditionally invest in companies like this, right? Because it went up and then it came back down, right? So its best days are in the past. Now, could it potentially go back up again? Yeah, but it doesn't show upward trajectory from a pure elementary standpoint. You're looking at a chart where the next chart, if you go to the next chart,
let's pull up Visa. Got you. Ticker V. Ian,
incredible.
I'm gonna go max out on it so that people can really clearly see it.
So this is more what you would like to see, right? Ian, where it starts.
Absolutely.
It starts low, and then over the course of time, it continuously goes up, right?
Yeah, I always say you want the long-term chart for any stock to look like what you want your bank account to be. Like, I don't like if my account goes up and down, up and down. I want to see a gradual incline, and then you want to buy it on a pullback. So if Visa pulls back 10%, also like the debt that we have is higher than ever. So if you want to be able, I know you guys have an episode on credit tomorrow. Check that out. But if you want to be able to take advantage of how much debt that the average American has, Visa is one way to do so, for sure, and safely. That I like them and American Express, but if I had to just pick one, I would probably lean on Visa, and that's not because we ran into the CEO at
yeah, we ran into the CEO, but we also ran into their sponsorship all over Accra. And so we talk about global brands. This is definitely one, and you can see they're leaders in this space. You have them, you have MasterCard, you have American Express, but you can see since the inception just the growth of the company. And for those who are new to looking at a chart, there are lines that I know it looks like it could be confusing, but these are just moving averages. So we have the 50-day moving average, 72-day, Ian, I know that's one that you like to use, the 100-day,
one of my favorites,
200-day, and then these orange lines are Bollinger Bands. They kind of give a deviation of the highs and the lows of that moving average in itself. And then at the bottom down here, we see this purple line. This is your RSI. Ian, I know you don't like RSI, but some people we just put it there so people can see it. And that tells if a stock or an equity has been sold, oversold or undersold. And so when you see the line at 20, usually indicates oversold, and when you see above 80, undersold, and when you see it above 80, it's oversold.
My favorite thing is when I get a chance to do in-person market research. So we was in DC. I asked him, like, hey, how do you think the economy is going to be? And he said, I don't know. But when you looked at his temperament, did he look happy or did he look worried? He was probably the most joyous person we saw in that hallway.
I didn't feel worry in his voice
at all. So I've been a fan of Visa for a long time. As a stock, I would say they are probably going to have a good 2024 and 2025 for sure. So shout out to him.
Let's go to one of these other giants in the consumer staples. Johnson & Johnson, ticker J&J, Johnson & Johnson.
They performed incredibly well. I don't like the stock for, of course, the number of reasons that most of us in the community will not, but the stock has performed well. I still like Eli Lilly a lot more. But you cannot deny the power of their stock. If I swing trade it, if I get around 147, I wouldn't be mad. Long term, I would not touch it. But if you look at the growth of the company, decade over decade, year over year, they have done incredibly well. They are in a space that really matters, that is almost recession proof. So yeah, J&J is a company I like. If I can get it at 136, I would love it if I had to buy it. I know it probably won't fall that far, so you may have to grab it in like the 140s and hold it for a long-term period. But back in 2001, it was at $51. It's at 161 now. So the stock has done incredibly well, and it does have that growth that I like to see when I'm looking at the all-time or at since inception chart.
These are just stalwarts on the market. J&J is one of them. We just spoke about Visa, and I mentioned that the three that dominate that space are Visa, MasterCard, and American Express. So let's pull up American Express, ticker AXP. Let's look at the chart.
Incredible. You guys should go look at the origins of American Express, how it was founded, why it was founded. I think that story is really interesting. Great client base. They may slide down if we do have an actual recession, and they announced that, but that's always a really great time to buy American Express. In 2000 when they dipped, great buy-in time. 2008 was a great buy-in time, and then 2020 was a great buy-in time. But for the most part, like I said, with the debt that we have, I think we're at 17.3 trillion in credit card debt. American Express is great, and if I compare Visa and American Express as like a soft index, if you will, like a credit card index play, that's a good one too. Those are two great ones to invest in.
Yeah, and then we spoke about it in 2021 about their expansion into the number 2 economy in the world in China, and we've seen nothing but great returns on that. So they were trading around 97 at that time, and you can see that they climbed all the way up to nearly $200 a share. So great growth in American Express, another global company like Visa in the payment processing center.
But American Express not really global though. Most places in the world don't accept American Express. MasterCard and Visa is accepted everywhere.
But that doesn't mean it's not global.
It's a global company, but it's not.
It's not as widely accepted.
Not even close.
Yeah, but it's global.
Yeah, it's a global.
But it has a higher end customer, so it offsets like.
So that's the other part
that MasterCard may have.
Yeah, and that was very intentional on their part about going into China, because they looked at the economy, and they looked at obviously the amount of wealth, the amount of billionaires inside of that country, and its expenditures, and so they high price items sell well there, and so this is a market that they look to go into, and it's been a good expenditure for them over the past 2 years. Let's go to another one, Ian. We're going to go to a different sector. We're going to go to Exxon Mobil. All right, so ticker XOM.
Great year last year. The stock, of course, took a dip in 2020, had a great rise, but I'm not the biggest fan of petrol companies or gas companies for the most part. If I had to pick one, it would be it. But I don't think they'll have as great of a year as they did last year. But if I had to pick one in that space, it would definitely be Exxon Mobil. I think you can get better returns elsewhere. If it dives deep again like it did in 2020 or 2019, it'll be a good time to buy. But overall, great company. But if you're looking at sustainability, environmental considerations, I wouldn't invest in Exxon Mobil. But the chart does look amazing long term.
Those look like a good chart. Let's move into the healthcare sector. I know we talk about Eli Lilly a lot. We've talked about Pfizer earlier and Moderna. Let's talk about Amgen. Ticker AMGN.
Amgen is another one that is I think outside of tech, healthcare is the most important space in America for sure in the stock market. This is reflective of that. If you look at that growth since 2009, 2008, at the time it was around $51. It's currently at 310. Not many people that invest in Amgen have many deep concerns. It doesn't draw down a whole lot. I think the max drawdown on it is like 21%. But if you look at the time when it's grown from, even if I go to 2020, it was at 237. It's at 310 now. Very stable. Definitely, if you're doing like options trading has risk, please consult your advisor or your swing trader. You can get a great bang for your buck. The healthcare space is definitely the second most important, and if tech wasn't here, it would be number one. So Amgen is a strong company, especially if you pair it with like an Eli Lilly.
All right, we're going to my favorite sector now. Kind of a sleeper inside of that. We always talk about NVIDIA. We talk about AMD. We spoke about ASML. Let's talk about Applied Materials, ticker AMAT.
Yep. Like it a lot, man. Look at that growth from 2016 when it was, or 2019 when it was at $38. It's at 151 now. And if I can share one secret, because a lot of people ask me about charting. If you just go look since the beginning of the business, if you hit the all or max available data, that alone would tell you. Because if they have more capital, bigger market cap, in times like this, they may expand through acquisition. The biggest companies on earth are going to continue to get bigger. And I want you guys in 2024, going into this fourth season of the show, to focus on the things that are going to make you rich and not gamble. So Applied Materials, I like a lot. If it ever falls back to like 117, that would be a good place to get in for a swing trade if you're trading it, or to get a position in your portfolio for long term. But they are a sleeper that not many people talk about. And I like this one a lot.
I'm gonna give you two more. Let's go to ticker BSX, Boston Scientific Corporation, BSX.
Another sleeper. And this is the power of like long-term holding. I know it's not the sexiest thing, like reading 3,000 books a day, like Cat Williams would do. But in 2012, it was at $5.54. It's currently at 58. The biggest criticism I probably get is that all the stocks that I talk about are blue chip. They're over $100, $150. This one is still in the 50s. But if you look a couple years ago, it had dipped down to about like $32. So if you need an inexpensive one that does pretty well, Boston Scientific is a pretty good company to put on your watch list.
All right, we're going to do our last one. We're going to banking. Let's do Capital One, COF.
Surprisingly, financials recovered pretty well despite the regional bank stuff. I'll probably invest in JP Morgan first over them. If I had to look at some of the exposure that Capital One has, I would definitely lean on Visa and American Express first. But they've done pretty well. In 2020, they were at $68. They're currently at 133. Of course, they fell apart in 2007 when the rest of the market did. But overall, Capital One has done pretty well. I will put them on your watch list. If they ever got down to $86 or $92.33, I would want to buy in then and hold for like a 4 or 5 year period.
Gotcha. Okay. And it's about to be earnings reports soon for the financials. I think in the next week or two, we're going to start seeing some of the earnings. So we'll see how the fourth quarter fared for some of these financial firms.